You leave with 3 calendar invites, 3 SEC alerts, not 3 trades. 3 companies have recurred across CipherHedge episodes: Blackstone in Case File 002, BlackRock in Case File 003, and Case File 001, Goldman Sachs in Decoded 001, and Power and Banks 001. Today we open the file on each one. This is monitoring, not recommendation. Watchlist is the channel's investigative monitoring format, different from case file, different from decoded, different from Power and Banks. Each watchlist episode names 3 publicly traded entities the channel is watching, walks each one's most recent 10Q, identifies the specific line item to watch in the next quarter, names what would update the thesis and what would close it. If you are new here, CipherHedge documents the math the system would prefer you not see: public data, public filings, education only. Subscribe if the next 13 minutes hold up. These 3 tickers have appeared across 5 prior episodes. Tracking what they do next is part of doing the channel's work, not because they should be bought, because their disclosures are the next data point in the same arguments we have already walked. Blackstone is the largest single owner of institutional single-family rental homes in the United States, named in Case File 002. BlackRock manages the largest target date fund family by AUM, named in Case File 001 and Case File 003. Goldman Sachs is the largest U.S. investment bank by net revenue, named in Decoded 001 and Power and Banks 001. Each one files a quarterly 10Q with the Securities and Exchange Commission. Each 10Q contains specific line items that move when the underlying business shifts. By the end of this episode, you will know which 3 line items to watch in the next quarter for each ticker. 9 specific figures to read when the next round of filings lands. Subscribe promise. By the end of this episode, you will have 3 calendar invites for upcoming earnings dates and 3 SEC EDGAR alerts set. Free, 5 minutes of setup per ticker, 15 minutes of monitoring infrastructure that runs for as long as the file stays open. Stay with it. This is monitoring, not recommendation. Blackstone is the largest U.S. institutional single-family rental landlord. Real estate segment alone, roughly $315.3 billion in real estate AUM as of the most recent 10Q. The firm manages Invitation Homes, the largest publicly traded SFR operator, under a management agreement disclosed in both BX's and INVH's 10Q filings. That management relationship is the link between the asset manager parent and the operator subsidiary. First, SFR occupancy and rent growth in the Invitation Homes Management Agreement. The segment reporting note discloses both as quarterly figures. The thesis from Case File 002 holds while occupancy stays above 97% and rent growth runs above 5% year over year. If occupancy softens below 95, or if rent growth compresses to under 3, the institutional buyer thesis enters a new phase. The file updates rather than closes, and the channel revisits. Second, real estate segment, AUM trajectory, currently above $330 billion. The real estate segment reports both fundraising, new commitments, and redemptions, capital returned each quarter. Watch the net flow. 2 consecutive quarters of net redemptions changes the segment's growth versus stabilization framing. Third, insurance segment growth. Blackstone has acquired several insurance portfolios in the trailing 24 months, including the AIG Retirement Services book. The insurance segment now contributes a measurable share of total fee-paying AUM. Watch the quarter-over-quarter contribution of insurance assets relative to traditional alternatives. If insurance grows faster than the alternatives segment, the firm's identity quietly shifts from private equity and real estate house toward insurance balance sheet manager. One non-obvious thread connects the 3 line items. The insurance segment generates long-duration capital, annuity reserves, life insurance float that Blackstone can deploy into the real estate and credit segments at lower cost than third-party fundraising. If insurance grows, the firm's effective cost of capital for real estate deals improves. The 3 line items move together. Watch them together. All three figures sit in the segment reporting note of the most recent BX10Q. The next 10Q lands roughly 45 days after the close of each calendar quarter. Mark the date on a calendar, pull the filing the morning it goes live. Read the 3 lines first. This is monitoring, not recommendation. BlackRock is the largest asset manager in the world by total AUM, currently above $15 trillion. The LifePath Index Target Date Fund family, named in Case File 003 as the comparison anchor against Vanguard, sits inside BlackRock's broader retirement solutions and investment advisory franchise. BlackRock also runs Aladdin, the firm's technology platform licensed to other asset managers, insurers, and sovereign wealth funds. 3 line items to watch in the next BLK 10Q. First, ETF inflows by category. The investment advisory and administration fees disclosure breaks revenue by product category. iShares, ETFs, separately from active mutual funds and index mutual funds. Watch whether net inflows to LifePath Index, TDF, accelerate against Vanguard's competing family. If the gap widens in BlackRock's favor, the retirement solutions thesis from CF-003 strengthens. If Vanguard's market share continues to compound, BlackRock's defensive moat in retirement assets quietly erodes. Second, Aladdin platform fee growth. Aladdin is BlackRock's business-to-business risk management platform, licensed to roughly 200 external clients, including asset managers, insurers, and sovereign wealth funds. The technology services line item in the income statement carries the Aladdin revenue. Most retail analysis misses this line. The growth rate signals whether competitive asset managers continue licensing the platform or build in-house alternatives. Third, private markets AUM. BlackRock has expanded into alternatives, private equity, private credit, infrastructure, through acquisitions, including the Global Infrastructure Partners deal. The segment reporting note breaks alternatives out of traditional assets. Watch the quarter-over-quarter contribution of alternatives. If alternatives grow faster than total AUM, the firm's product mix shifts toward higher fee strategies, which has cascade effects on the rest of the asset management industry. The 3 lines connect. ETF flows are the franchise. Aladdin is the moat. Private markets are the margin upgrade. When all 3 move in the same direction, the asset management business model is consolidating around BlackRock. When 2 move against the 3rd, the consolidation thesis loosens. The quarterly filing tells you which scenario the firm is in. 3 line items. 1 quarter's filing. The next, BLK 10Q, lands roughly 45 days after the close of each calendar quarter. Mark the date. This is monitoring, not recommendation. Goldman Sachs is the largest U.S. investment bank by net revenue. The firm appeared as a recurring actor in Decoded 001, asset holder beneficiary of monetary expansion, and in Power and Banks 001, alongside JPM, BAC, WFC, and C as one of the deposit rate spread beneficiaries. Goldman's revenue mix is more concentrated in capital markets activity than the other Big Four, which makes its quarterly results a near real-time index of deal-making volume. 3 line items to watch in the next GS10Q. First, Marcus Consumer Banking Deposit Base. Marcus sits inside Platform Solutions. Following the strategic review the firm announced, Goldman has signaled the franchise will either grow into a meaningful retail business or sell the deposit base to a buyer better positioned to operate consumer banking at scale. The Platform Solutions segment disclosure shows the deposit balance quarter over quarter. Watch the direction. The signal is binary. Second, investment banking revenue volatility. Global Banking and Markets reports IPO and M&A advisory revenue separately. When the IPO pipeline freezes, this line drops by half. When deal-making activity rebounds, it doubles. The advisory line is the closest single quarter read available on capital markets activity, and it forecasts the rest of the industry by a quarter. Third, Asset and Wealth Management, AUM, trajectory. Goldman has been expanding the AWM franchise through acquisitions of credit boutiques and lateral hires of senior wealth management teams. The segment AUM disclosure shows whether net inflows are accelerating into the AWM platform or whether the franchise is treading water against larger competitors like BlackRock and Morgan Stanley Wealth. Goldman's 3 line items, each move on a different cycle. Marcus moves on strategic review timing. Investment banking moves on the deal-making cycle. Asset and wealth management moves on net inflows and acquisition pace. Watching all 3 at once reveals which engine is firing and which is idle. A single quarter's read is rarely conclusive. 3 consecutive quarters of trend is. 3 line items, 1 filing. The next GS10Q lands 45 days after quarter close. Mark the date. How to monitor a public company without getting front-run by news cycles. 3 rules. Rule 1. Read the 10Q before the earnings call, not after. The 10Q is filed first, usually within 45 days of quarter close. The earnings call is the company's narrated framing of what the 10Q already says. If you read the filing cold, you build your own thesis on the line items before the company tells you what to think about its own disclosure. Then you listen to the earnings call as commentary on what you already know, not as instruction. Rule 2. Set SEC EDGAR full-text search alerts on material 8K filings. EDGAR offers free email alerts for any filing by any company. Set them for BX, BLK, GS. An 8K is filed when material events happen between quarterly reports, acquisitions, executive changes, regulatory actions, debt issuances. The alert lands in your inbox the same day the filing posts, before most news coverage picks it up. The 8K is the canonical primary source. The press story is the secondary interpretation. Rule 3. Pre-decide which line item is the signal. Do not let the headline pick it for you. For each ticker we just walked, you now know which line item matters. SFR occupancy and rent growth for BX, ETF inflows by category, and Aladdin fee growth for BLK, Marcus deposit base, and IB advisory revenue for GS. When the next quarterly filing lands, you read those lines first. If they move, the thesis updates. If they do not, you move on. The headline writers do not get to pre-decide what the file is about. The framework runs on one operating principle. The filing is the primary source. The press release is secondary. The analyst note is tertiary. If you start at the filing and work outward, you avoid the most common monitoring mistake, letting someone else's framing of the data anchor your own. 3 tickers, 3 quarterly filings, 3 line items each, 9 specific figures to read next quarter. The watch list is set. 3 moves, none are trades, all are monitoring infrastructure. Move 1, set free, SEC EDGAR alerts on BX, BLK, GS. Go to sec.gov, click Filings, then full text search. Save a search for each ticker name. Configure email alerts on the saved search. The setup takes 5 minutes per ticker, 15 minutes total. The alerts fire on any new filing. 10Q, 10K, 8K, proxy statement. You see the filing the day it posts, before any news cycle reframes it. Move 2. Add the next earnings date for each ticker to your calendar. Pull the dates from the earnings calendar grid on screen. 3 calendar invites. Set a 45-minute reminder before each, so you have time to pull the 10Q from EDGAR ahead of the call. The pre-call pull lets you read the filing cold before the company narrates it. Move 3. Decide which, if any, is in your investable universe before the next earnings call. This is the rule that separates monitoring from reactive trading. If you pre-decide that BX is in your universe and BLK is not, the next earnings cycle is a binary update on the thesis, not a fresh decision made under headline pressure. The pre-decision is the operating discipline. The post-earnings reaction is what you are trying to avoid. Mandatory disclosure. When this channel names tickers, the channel discloses whether any positions are held. Today's positions are on screen now and pinned in the comments. Watch list is monitoring, not recommendation. Education only. Talk to a licensed fiduciary before sizing any position in any of the 3 tickers named. The framework on this page is for monitoring. The decision to invest, hold, or pass is yours and your advisor's. The infrastructure outlasts the episode. SEC alerts run forever. Calendar invites repeat every quarter. The pre-decision survives any single earnings call. 3 free tools, 15 minutes of setup, multi-quarter monitoring discipline. Watchlist 001 is open. The file stays open until next quarter's earnings. 3 10-Qs from now. This is monitoring, not recommendation. The framework on this page tells you when to read. It does not tell you what to do. Next Tuesday, case file 004. Auto loans. $1.6 trillion outstanding. 90-plus day delinquency, approaching 6.6%, the highest level since 2010. The subprime boomerang. Subscribe so it lands in your feed. Education only, not advice. Talk to a fiduciary before you do anything with your own money. See you Tuesday.